Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 4th of February, 2020. And we got a new all-time high, at least in the Nasdaq. Technology sector and technology shares, particularly with some of the leading tech names, including Microsoft and Amazon, but also the tech sector, which is XLK. Gosh, those are up 2.5% today, whereas the other indices, well, they were up 1.5%. And Tesla, I think last time I looked at it before the close, was about 13% to the upside after gapping and going much higher than that. So in tonight's video, we're just going to do a quick overview of the week ahead and mainly look at where we are on the bigger picture and continue to update our scans of stocks at new all-time highs. And the thought process, once again, is that which is strong tends to get stronger. And the strategy or the trade or the efficient profit is in the direction of that trend, but not just randomly on pullbacks. So this is our intraday Nasdaq chart, followed up by the S&P, which had more of a rounded reversal effect, and the Dow mini futures, like the S&P and the Russell. Well, most stocks or most markets had that rounded effect today, which is typical for a trend day in the equity market. Crude oil had some trouble today, closing beneath 50 per barrel. We'll come back to that. And gold, like bonds, had a pretty nasty trend day to the downside. If you're looking at equity trend days or trading money flow, risk on, risk off, this is exactly what you want to see throughout the entire trading session if you are bullish equities. If you're bearish equities, you don't want to see gold in a downtrend all day long. Nor do you want to see bonds, shown here with the TLT, or the ZN, or the ZB. Okay, so that's our intraday charts and intraday levels. Let's take us up. Well, before we do that, let's start with the daily chart. We'll take a look at the S&P 500 because it is bouncing off, per the game plan at least, the pullback spot to 3220. It happens to be a price overlap with a value area extreme, weekly expected move, and that 50-day exponential moving average. That is a great spot to get long or bullish, or at least take off some or all of your short sell positions with a profit. That's in-out spreads put on up here, suffered through a few days of additional upside action, but the in-out spreads bullish or bullish type of trades do come off of these support levels. In the Nasdaq, when the S&P is not at all-time highs, it's going to close today roughly at 3,300. The Nasdaq did make new all-time highs, jumping around this 100-handle move from 9,000, which was not the 50-day exponential, but was the 20-day. That is where the pullbacks typically take place, where the risk is typically managed, and for my strategies at least, or the pullback trades, those retracement in-out spreads or verticals or just long shares or intraday strategies do take place in something that is strong, getting stronger, and entering positions or managing risk at these rising moving averages. The Nasdaq is the only market that is at all-time high, so keep that in mind as we do look at the S&P in a moment. So the other markets would be the Dow mini futures, 29,000, and the Russell continues to be the weakest of the four. It actually broke and traded under its 50-day moving average. So these are the key market updates or key market levels to watch into this week and beyond. Keep in mind, uptrends have a greater chance of continuing into the future in the same direction that it is moving. It's like a freight train. It takes a while to turn a freight train around and takes a while to turn the market the other way. You don't normally have markets just do a V-spike reversal unless we have some type of mega negative news. And that's always a risk. That's why the option strategies or in-on spreads tend to be better than just outright long or even outright short positions. You do have your risk controlled by the positions and the contract size and, of course, how you structure the spreads. In the scan world, this is where I take you normally within a video when the market makes new all-time highs. The S&P did not do that today, but the Nasdaq did. And we're still taking a look at these strong stocks getting stronger, or at least officially from the scan criterion, making new 52-week highs, or really a new annual high. And that could in some cases be new all-time highs. This scan doesn't really filter that out. and I like to sort them by market cap. At the moment of the S&P 500 stocks, we have 63 of those making new 52-week highs. That's quite a bit. That shows strength across the board. We'll take a look first from the sector perspective. Industrials, and we can see it here too. Industrials, discretionary, healthcare, and financials, and information technology. Those are where the strength is coming from, at least from a sector or money flow standpoint. I'm a little bit surprised to see these 4 or 5 utility stocks make new all-time highs or new 52-week highs, because the energy or the utility sector right here was the weakest of the day. That's actually bullish. You do want to see utilities the weakest sector, and that's what we saw. Energy was second weakest, and in terms of this bull market or bull trend continuing. So to recap, treasuries were off today in a trend day down. Bonds, VIX was also, and of course gold. That is bullish when those money flow signals are firing off in the market. Now let's take a look at the market cap sort. We certainly can't spend the video looking at all of those stocks, but we can take a look at least from a scan of market cap and take a look at least the first 5 or 6. That includes Microsoft, Amazon, Johnson & Johnson, MasterCard, Procter & Gamble, Coca-Cola, Adobe, Salesforce, and down the list. And I have a scan as well, new yearly highs, that takes a look at the same scan, same type of logic, but puts it into a watch list, and that allows me, or you, us, to sort them either by percent change or what I have right now. Might not be able to see it, but it is sorted by market cap. So it's essentially the same list as I have earlier. So sort the names by market cap. So what might be going on? What are we looking at? Again, that which is strong tends to get stronger. Microsoft notwithstanding. It's actually broken above the upper trend line, and it's done that a few times here in 2019, but we don't want to do a trade off of that. So that's a little too rich for our blood, too high for our in-out spreads, and too far beyond the moving average, which is our spot to manage risk. So that's probably a foregone stock at this point to get a trade off unless you're an intraday type of trader. Amazon had strong earnings that pushed it above $2,000 per share, and is at a new all-time high. Right there, sure, just by a little, but still that is a new all-time high for Amazon shares. And that's one to watch, and that's in part why the technology sector has been so strong. Johnson & Johnson, kind of a, not really a exciting stock like Amazon or Tesla, but it keeps creeping higher. Again, strategy is to buy on the pullback, put on positions into that rising moving average. It's too far away right now. So these stocks do add watch list candidates or things to watch, write down, put in individual watch list components, and then trade, buy contracts on the way down, are really into support. MasterCard is another sort of financial information technology stock that had its range expansion into range contraction and a breakout. Again, buying the pullbacks on those moving averages. Procter & Gamble, Coca-Cola, which is relentless, strange for a beverage stock. Adobe, which is again relentless. And these gaps do serve as momentum, especially when confirmed by volume. And we'll finish with Salesforce.com, CRM. Just to name a few, but I'll scan the list. Eli Lilly, Accenture, and many, many others on the list for us for candidates. Too many to name, of course. Wouldn't be doing my job if I didn't take at least a partial look at Tesla today, which had extensions and strong, I guess that's record volume for an intraday session that has blasted it from its range contraction to range expansion, doubling. Believe that or not, I have trouble believing it, but here it is, doubling from 400 to the peak just shy of 1,000 in January. Well, I guess into February, technically. So that's one of the concepts of strong stocks get stronger. Buy the pullbacks, but it's a foregone conclusion now. A little bit risky, too much volatility to trade for either side of the market, unless you are an extraordinarily strong-stomached, strong-willed, and risk managing trader. The implied volatility over 150%, which gives really, you had that move today ultimately. Nonetheless, it's a little too rich for most of our blood unless you are an extremely cautious trader with your managing risk. So Tesla probably is off the table for most traders. I still prefer trading that which is stable, staying away from the hype, staying away from the risk, and just capturing even little boring, if you will, pullbacks, stable pullbacks to these rising trend lines, rising moving averages. But in this market that seems to be bull nonstop, the trend still continues and the same names keep making those new highs. So we'll join those trends as they allow us time to get on them. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for February 4th, 2020.